We're going to do a video on T-bond futures. Bond futures, we got a daily chart here of the Chicago Board of Trade T-bond futures contract for December. And this is a daily chart with a 200-day moving average in blue, 5-day moving average in green, and a 20-day moving average in red. Let's take a look at this chart real quick. We can see we've been in a bear market all the way back since December 2021. And I'm going to show you a weekly chart. This is a daily. I'm also going to show you a monthly. We can see that significantly we closed above the 20-day moving average here, the red line, for the first time all the way back since right around August 10th of 2022. So that's a huge technical indicator here of what's going on in the bond market. We can see we put in a low in the bond market here of October 24th at about 117 and 19/32, and we went across here for a little bit and put in a good strong rally Thursday and maintained it Friday and put in this this new top. Now, this closed Thursday, and this maintenance of it Friday is a really good sign that maybe we've put in a bottom in the bond market, which would obviously forecast a top in interest rates and maybe back off some interest rate pressure for the long-term mortgages. So let's take a look real quick and see what's going on. We can see that we barely have the 5-day green moving average, which is just touching the 20-day moving average. So let's go to the weekly and see if we can see a better analysis of this. This is a weekly chart. We can see here's your high all the way back in the bonds, meaning the low of interest rates in March of 2020. These are inversely related. Bonds go down, interest rates go up. So bonds go up, interest rates go down. So we have a flat 20, this is a flat 200-week moving average in blue, a 20-week in red, and a 5-week moving average in green. Now we can see for the first time in a long time, probably all the way back here since July 25th, we've got a weekly close above the weekly 5-week moving average. So that's another positive sign on the weekly chart. This is clearly still in a bear market. It's an enormously negative looking chart, but it's also oversold. So we can see that we got about this oversold, roughly this amount oversold, and we got a decent rally in the bond market from about 131 to 140. That's almost 15 points, 14 points right there in the bond market. That's a really solid rally in the bond market. And then it turned right around and sold off again. So I suspect we're probably going to come up a similar amount at a minimum. So we're going to look for a minimum rally in the bond market to about 130. Roughly, so it's right about here where I've got a cross on a weekly chart, and that's going to put us right, really just touching the 20-week moving average. I'm not saying it's going to happen this week or this month, but it's going to happen here in the next couple, months at probably roughly at the 2-month mark or 6-week mark. We'll probably get to the 130 level. It's going to be backing and filling and so forth, just kind of like it did here. That's my guess for entertainment purposes only. Let's take a look at the monthly chart. We can see monthly chart doesn't look as horrible as the weekly, in my opinion. We're below the 200-month moving average. We're below the 5-month moving average. The 20-week monthly moving average is still a negative chart, but it's not enormously sold off in terms of oversold. We got a decent rally here and then a sell down. But looking at these other rallies and declines, it's not as deep as this decline was here. This decline went from here, 131 from 167. That's 30 seconds. This one's gone from about 145 to about 117. So it's roughly, it's within a few points there, but I wouldn't say that this chart is a hugely negative chart. I think we could easily rally up here to this 130. So that's my short-term forecast for this, or rather my 6-week to 2-month forecast. So bond market's probably going to rally up here to about 130. It's going to back and fill and do its thing. Probably something similar to this rally right here that you saw. Then this took 2 months to get up there, and that's probably what's going to happen. It's maybe a hair faster, but 6 weeks, something like that. So that's what we got for you on the bond market. Let's take a look at the algorithmically generated entry prices for tomorrow, the 14th of November. We put them out every morning before 7 a.m. They're down here somewhere. Treasury bonds from RBAM Research, all for entertainment purposes only. Can't use them for anything other than entertainment, including my commentary or entry prices for the 14th of November. ZB is the December chart for Treasury bonds. It's Chicago Board of Trade, and we're showing buys here. 1, 2, 5, 10, and 20 trading day holding periods. We show buys at 22 and 15, 30 seconds. And then variations of that at 123.5, 123.9, and 123.14, depending on the column. These are higher probability trades, but basically these are the basic ones across here. So buys across the board from 1-day hold all the way out to 20-day hold, all for entertainment purposes only. You trade at your own risk. You should always do your own analysis, but that's what we've got for you. And we have them every morning before 7 a.m. at rbamresearch.com. You can get a free trial period over there with no credit card. Follow the link in the description below to rbamresearch.com and get free, immediate, instant access with your email address to 190 stocks. The major forex pairs and BTC crypto is currently suspended, but we do have all the futures contracts here, the S&P 500, crude oil, gold, and of course T-bonds we just looked at, all updated by 7 a.m. Keep in mind, everything's for entertainment purposes only. You trade at your own risk. You should always do your own analysis. You can't use our entry prices for anything but entertainment, including my commentary. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, or you have a ticker symbol you'd like us to do a video on, please leave it in the comment section below and we'll consider doing it.